Money on my mind, looking for a dime. James Locke in the house, gonna help you shine.
Welcome to the Poole Locke YouTube channel. I'm James Locke. Today we're going to answer two more Ask James questions of the day. So we have this first question. Michael. Michael says, I've been watching the channel and I really feel like I have FOMO, fear of missing out about crypto. I didn't buy Bitcoin. My friends keep talking about it. I'm not really sure what to do or if I already missed out. Can you help? Well, Michael, it's understandable to feel like you have FOMO when it comes to Bitcoin and cryptocurrencies, especially seeing the significant price movements and hearing about it from friends, right? Bitcoin has indeed surged just up and up and up, well over $100,000 a coin now, and that can definitely trigger feelings of missing out. First, it's essential to recognize that Bitcoin and other cryptocurrencies are still relatively new and unproven as long-term investment vehicles. Much like early-stage AI technologies, there's a spectrum of opinions from those who see it as the future of currency to others who view it skeptically as potentially a bubble or even a scam. Now, in the context of investing for income and retirement, which is our focus here, let's break it down. Cryptocurrencies, including Bitcoin, typically do not generate income or dividends. They're more speculative assets, similar to early-stage tech stocks. Therefore, they may not align well with the goals of investors in the income or transition stages of retirement planning. For those in the accumulation phase, where growth is the primary goal, it might be more acceptable to consider a small allocation to cryptocurrencies, keeping in mind the high volatility and speculative nature. However, even in this stage, diversification across various asset classes is crucial to manage risk effectively. So as for Bitcoin potentially becoming a reserve currency or a widely accepted form of payment in the future, it remains uncertain. Governments and central banks around the world are exploring digital currencies, which could potentially impact the future landscape of cryptocurrencies in general. In my own approach, I hold a small amount of Bitcoin, mainly as a hedge against missing out entirely. It's an amount that, if lost, wouldn't significantly impact my overall financial plan. So this cautious approach is essential, especially for retirees or those nearing retirement, where protecting capital and generating stable income are paramount. Ultimately, if you're considering investing in cryptocurrencies, do so with the understanding that it's a speculative and high-risk investment. Ensure it fits within your overall investment strategy and risk tolerance. If you're in the income or transition stages of retirement planning, prioritize investments that provide stable income and have a track record of weathering market fluctuations. So stay informed, stay diversified, and be cautious with speculative investments like cryptocurrency. This way, you can make informed decisions that align with your long-term financial goals and retirement income needs. So that was a great question. Thank you so much for that question on Bitcoin. If you would like to send in your question, you can do so. You can always email them to us. Email them to poollocke@poollocke.com. Let's get to our second question. Second question is from Eric. Now, Eric says, I'm in the transition years. I know I need to be cautious, but I feel young. I feel like the 60s are my new 40s, and I still want to be in the game. So how can I do it without risking my retirement? All right, Eric, it sounds like you're embracing the idea that age is just a number, and you want to stay actively involved in investing without jeopardizing your retirement. So that's a great mindset to have, and there are indeed strategies that can allow you to stay in the game while managing risk and focusing on income. In your transition years, where you're looking ahead to retirement within the next decade or so, it's crucial to adopt an income-first approach to your investments. Now, this means prioritizing assets that generate reliable income, such as high dividend-paying stocks. We've discussed on this channel how these stocks can provide attractive yields, often above 4%, 5%, which can supplement your retirement income needs. Now, if you're considering venturing into more speculative areas, like cryptocurrencies or AI startups, areas that don't typically provide immediate income, you should approach them cautiously. Allocate only a small portion of your portfolio to such high-risk investments. This way, you can participate in potential growth opportunities without putting your retirement security at significant risk. For the bulk of your portfolio, however, sticking to investments that offer stable income is prudent. So this might include a mix of dividend-paying stocks, bonds, and possibly real estate investment trusts, REITs, that focus on income-producing properties. So these assets not only provide regular cash flow, but also have historically shown resilience during market downturns. Another consideration for your situation is to ensure your investment choices align with your risk tolerance and financial goals. Now, as you approach retirement, preserving capital becomes increasingly important. Diversification across asset classes can help mitigate risk while still allowing for growth opportunities. Remember, being in your 60s doesn't mean you have to shy away from the market or exciting new technologies like AI. It's about balancing your desire to stay engaged with investments that support your financial security in retirement. Now, by maintaining a diversified portfolio with a focus on income and managing speculative investments responsibly, you can navigate these transition years with confidence. So keep that youthful spirit alive in your investment approach, but always prioritize stability and income to ensure your retirement goals remain within reach. Now, maybe a future question, if you have specific investment strategies or asset classes that you're talking about, you can always feel free to email them in and ask us, right? It's important to tailor your investment decisions to your individual circumstances and goals. Thanks for two great questions today. As always, if you would like to send in your questions, please do. Email them to poollocke@poollocke.com. And if you like what you heard, go ahead and like and subscribe to our channel. I'm James Locke, your retirement income source. I'll see you next time.
Money on my mind, looking for a dime. James Locke in the house, gonna help you shine. Retirement is near, don't you live in fear. Listen up, my friend, let me make it clear. Savings in the bank.